So much for Hello, everyone. Thank you for being so very punctual. I see everyone is starting to join in. So thank you for that. If you joined us a couple weeks ago, I was on with the team, but today Claudia and Greg are both in the background, but I will be joining you for the next hour. Again, if you this is the first time you see me, my name is Rachel Maga. I am here on the Horizon team, really and truly just to make sure that as our opportunities continue to grow, that the messaging is always very, very clear to our accounts, but also just really helping to make sure that your journey through, the first time you see any messaging from Horizon all the way through getting to work with our team and beyond. So if you have any questions for that side, that's where you come to me on the marketing and communications and affiliates, that whole world. So that's why I'm really excited to be here. You may be seeing more of me on a few of these, just as we have some of our wonderful, wonderful guests joining us. So, I know we typically always kick things off with starting with where you're from. However, today, I want to just hear a little bit more about you specifically. So, when you kind of think about your current situation on a scale of 1 to 10, I'm curious to know how confident do you feel about your current retirement plan? So, how confident do you feel on your current retirement plan on a scale of 1 to 10? 1 being, I have not put any thought into this, and 10 being, I am so confident there's nothing I can do to improve it. You can jump into the chat and kind of give us a little bit of a 12. Paul, I need to know, I need to have a whole conversation with you. If you guys can go ahead and jump into there, I would so greatly appreciate it. While you're all filling that out, as you have, if you've been on one of these before, you know that we always want to kick things off with our disclosure, which is, as you know, we are not CPAs, we are not your legal team. We are a passive custodian, and as such, we only perform the duties of the custodian. So we do not provide advice, we do not sell investments, nor do we offer any tax or legal advice. So as you get on a call with our team, as you're exploring all of your different opportunities, it is still very, very critical that you understand that you are self-directing your retirement funds. Our team is here to be the vehicle, so we will actually be able to help you to pick up the funds from where they currently are and move them over to the investment deal that you decide is best for you. Um, so let's go into some of these numbers. It's always amazing to me because when you really look at where do we feel most confident right now, you look through and you see obviously lots of fours and fives and sixes, and obviously a couple of threes, but that tracks with what we see at Horizon every day. Most people aren't sitting at a 12. Most people aren't also in a sense of crisis where they're at a 1. They're somewhere in the middle. They may think that something might be off, but they're not quite sure exactly how to fix it. And that's really productive place to be because it's the moment when you get to really absorb the information like you're going to get today, but you're not in a panic state. So I'm excited. Just that's why I want to spend the first few minutes today kind of thinking through, when you think of that and what your number is, what true principle do you feel like that is kind of lying back to? So before I share with you one of the principles I want to talk with before we bring on our guests, I want to kind of think through a second question and jump in the chat for this one as well. When you look at a potential investment, what do you look at first? Do you look at the numbers? Do you look at the operator? Do you look at the market? Or is it something else? Go ahead and jump in the chat with one word. What is it that you really look at first? Numbers, operator, market, something else. People, numbers, market. We're pretty much across the board. We see that a lot, right? So we see a lot of times numbers are number one, right? And I totally get that because the numbers are the shiny part. It's the projected return, it's the cap rate, it's the sometimes beautiful, sometimes not pitch deck, and that's what really gets you really, really excited. And we see that every day. We hold over 8,700 clients doing this type of investing. So when we see deals that go sideways, it's not always because, an asset class or a market was bad. it could be the person or the team running behind it. So you could have two identical apartment buildings on the same street built in the exact same year. You have one incredible, great operator that they're filling the units, they're keeping the tenants happy. And then you have the other who's a mediocre operator. Same building, but they may be losing money. Same asset, different operator. So I just want to share that with you because I think it's really, really important that when you're looking at the investment advice, in we are kind of looking at the framework of all of it. It's really, really important that you kind of go down through your personal outlook of exactly how to evaluate that operator. So I say all of that because it really resonates with as we go in and bring in these wonderful guests that we have. And before I introduce our guests, I want to call out that it's really, really, really important that you understand that as you're after we wrap up these webinars, you do get an email from us. It's a very quick survey. That survey helps us immensely because it helps us to know exactly the feedback that you're getting. Here's why. Because if you give us really great feedback of we loved this guest, or we really are looking for more information on this, me and my team are able to go bring those people into these webinars for you. So please don't ever skip over those surveys. And I know that everyone's favorite question to ask is, will there be a replay? There will be a replay, and you will get that link in your email after you fill out that survey. So if you can please help me with that, I would be so greatly appreciative. All right, so I'm going to go ahead and bring in our guest. Our guest today is Savannah Arroyo. She is the founder of Willow Investment Group, and she works in senior housing, which has actually been a topic that we have heard so many of you asking about, which is why I'm really excited about this. What's interesting about her background, though, is she is an registered nurse. So she can speak to the clinical side. She's speaking to the operational side of senior housing in a way that most people may just be looking at it from the real estate side. So we're really, really excited because I know this is a topic that we have heard from you all, but she's here to educate you on her sector. She's going to be sharing her perspective, and then any questions that you have, as always, please put them in the Q&A if they go into the chat. We'll try to keep our best eye on it, but please, please, please ask away. Savannah has a pretty wonderful presentation for you all, but we'll definitely, as always, make sure that we leave time as well. So, Savannah, welcome. We are so, so excited to have you.
Awesome. Thank you, Rachel. I am loving all the chat going on. Really great to see people engaged and sharing in the answers. And like you said, all over the board. I recognize a few names in there, and I've had the privilege to connect with a couple of the people here via Horizon Trust. We've had a really great working relationship over the years. I personally have my retirement funds when I left the hospital, moved over into Horizon Trust. So happy to meet you all. I'm going to share a presentation. Give me 1 minute. Let's do this. Right. How's that? Good? Everyone can see. Okay, great. So I'm sure a lot of you got the email ahead of this that was talking about the silver tsunami. If anyone is unaware of what that means, what that's in reference to. So it's really the aging baby boomers, right? So over 11,000 Americans are turning over 65 every single day. The population for 85 and older is the fastest growing age group right here in America. And the demand for assisted living is expected to continue to grow. I'm curious, keeping the chat theme alive, how many of you have either are familiar with assisted living more on a personal level, like you've enrolled maybe a parent, a neighbor, a family member, a friend? Does anyone have any experience with senior housing in that respect? I would love to see and hear. It is something that I have a lot of experience with just because of my background as a registered nurse. I have been a registered nurse for over 10 years. I've worked in a lot of different settings over the years. Really early on in my career, I always loved patient care, but really loved process improvement and operations and supporting my team. And so went back to school early on and I got my master's degree in nursing leadership and administration. And I served in many different departments, oncology, orthopedics. As I started to gain traction in my leadership roles, I was overseeing the cath lab and the special procedures. So think all the patients that are coming into the hospital with heart attacks and strokes, I was overseeing those departments and teams of over 100, 50 different physicians. It was a lot of fun and learned so much. And during that time as a registered nurse, I started to learn more about real estate investing as well, because although I was earning an income, I wasn't really working towards my investment goals, my financial freedom goals as quick as I wanted to be. And so started learning a lot about investing, more specifically real estate investing. And it was for me really sitting to Google in a time of desperation. I had 2 kids under the age of 2 and was looking at my demanding schedule as a nurse administrator in the hospital and was setting to Google how to build income, how to invest, how to um, gain financial freedom, and real estate investing kept popping up again and again and again. And I just had to dive in. I knew there was something to it. And so started listening to tons of podcasts and reading books and learning about real estate investing. And although I got started in multifamily, more specifically, flipping apartment complexes, some self-storage, as I advanced in my nursing career, I started to see just the huge demand for this. And for instance, I ended my career on an orthopedic floor and we'd see it all the time. At every shift, we'd come in, there'd be the 80-year-old lady who fell at home, broke her hip, and it was unsafe for her to go back home. And it didn't mean that she needed extensive medical care. I mean, not at all. It was really just help with laundry, meal preparation. For a lot of aging seniors, it can be the social dynamic. Unfortunately, a lot of seniors are aging in home completely alone and isolated, and they don't have family around. They don't have a lot of friends around, and really unsafe for them to be in a home all by themselves. Things start getting missed, medications start getting missed, doctor's appointments start getting missed, and really the solution to this is these residential care facilities for the elderly or senior housing. So there's been a huge need, a huge demand across the country. There's not enough houses for seniors, not enough places for them to go. And so I saw the huge need specifically in the community where I'm at, and I'm based in Santa Rosa, California. So Northern California, I think wine country. We're very close to Napa, which many people are familiar with. And here there's just a huge need. And so we're buying properties and converting them into residential assisted living. So why we've kind of switched from multifamily and more traditional real estate into the residential assisted living is economies of scale. So traditional real estate, having tenants, rent payment, kind of limited income growth. When you move into assisted living, there's the business aspect of things. Commercial real estate evaluates differently than a single family home, for instance. So multiple residents in place. For example, here in Northern California, seniors are paying $8,000 to $10,000 a month for a room. So if you think of a single family home that we're buying, a 4,400 square foot home, and we're converting this into a residential care facility for the elderly, an existing tenant may be paying $1,000 a month for that building. Well, if you fill it with seniors now, you're getting 10x that. So from a investing standpoint, the economies to scale are huge. So both investing in real estate and the operating a business, and specifically, and I'll dive into more our investments, but we're also taking advantage of the startup business in this because we're buying a real estate, a home, and then we're starting the business from scratch for a senior living. So that also makes exponential returns for our investors. So a lot of excitement around this asset class as a whole, a lot of different ways to jump into it. Me as an operator, this will be just my way that I'm investing in residential care facilities, senior housing, a lot of different ways to do that. I'll talk through really our approach and what we're looking at, especially with the real estate background. So looking more a bit why families are choosing care homes. So more as opposed to you have a couple different options if any of you have gone this route when you're exploring different housing. There's huge institutions where you can go maybe 200 rooms, feels a little bit more institutional. And then there's homes. That's the other option, and there can range from maybe 4 residents in a home up to 20 residents. Our homes are 15 residents in a home, and that's a really good middle point for us and making it still smaller, but then having enough people in there that it warrants staff in that sense. But families really love that smaller home feel. And when you think of seniors who are transitioning and making this transition, most of them are coming from a home. And so it really makes that transition process a lot easier when they're moving into a place that feels very similar to what they're leaving. And if any of you have walked with a senior through this process, the transition phase is difficult for them. I mean, for a lot of them, they're giving up a home that they've lived in for decades or they've raised families in. And, and on the other end of the spectrum, there are people who move into these facilities who are so ready to give up a full house. Some of them are coming from a 5-bedroom house and they've been living alone in it for 10 years and doing all the cleaning and upkeep and things. And some of the maintenance items are going untouched. And so some of them are very thankful to move into now a residential care facility where they have their own room, their personal space, but they're sharing more of the common areas with other people, more of the personalized care, home touch, the higher caregiver attention that we have in these homes too. Really, we feel creates a better quality of life for residents. I have worked over the many years with seniors moving into both an institutional type feel as well as a care home, and really just the better quality of care is in these care homes. So a little bit more of a background about myself. I gave you a little bit of an inside look into my nursing career, how we got started into investing more specifically through these funds. But as I've transitioned into the senior housing, I do have my RCFE administrator license. So that stands for Residential Care Facility for the Elderly. You'll hear so many different terms used interchangeably: care homes, senior housing, RCFEs. Really, it's a blanket statement for the care, and there are different levels for sure. You have your skilled nursing where they're doing wound changes and more skilled nursing services that you would see, trach care, different tubes and things that unfortunately some seniors get as they get older. So that's a higher tier. We're investing in the very, very low tier. So the caregivers that are coming in are basic first aid CPR certified. Me coming in with my RN license is very, very helpful in these facilities. But I would say 95% of them run without a nurse. So for us to be able to come in and jump in the game and have different facilities with a nurse level of care really sets us apart from other competition and other homes in the market. So a big differentiator is having my RN background coming into this asset class, and touching on the question that Rachel posed early on in the group, what sticks out to you? I mean, an operator is huge when you're working through these investments. And I've To date, we've done 10 different fund deals, raised over $8 million, mostly from healthcare professionals. I do speak mostly to nurses and doctors just because that's my lane. And so I tend to gravitate a lot of those individuals, but I do have investors who are non-healthcare, but I would say about 80% of them are nurses, doctors, pharmacists, and such. And so really creates that perfect fit now, investing in senior care housing, having people with the background knowledge and insight into the healthcare system who see firsthand every day they're going into work, the huge need for it. Has been really, really cool to see the big interest in these investment projects moving forward. But Willow Investment Group is the company that I own with my husband. Him and I started it in 2020. Like I said, I've done mostly multifamily, self-storage, and in the last year, we've purchased 3 residential care facilities for the elderly. So it's 3 different senior housing. So we're really coming in and combining the healthcare expertise with real estate investing now and really honing in on this asset class. And the returns are substantially higher than even the multifamily deals that we were doing, which have we've done 2 full exits, earning our investors 24% average annualized returns, which compared to the stock market hovers around that 6-7%. So a great way to come in these investments and diversify your guys' retirement funds with Horizon Trust. Great. A huge proponent of self-directed IRAs for that reason alone, just the differences in returns that you can see in alternative investments. But looking even ahead with these assisted living facilities, we're projecting above 30% internal rate of return on these investments. So just a lot of potential in these investments. So, to dive into a little bit more of our business model and how we're looking at these investments. So, we're purchasing a property and renovating it. So, we're raising a really hefty construction budget, around 500,000, close to 1 million, in between 500,000 to 1 million renovation budget. We're renovating these buildings and turning them into senior housing. So, for example, the last couple projects we built, the first one we got was a 4,400 square foot single family residence that was split into almost a quad, a fourplex of sorts. It had 4 kitchens, 4 different units. And we tore down all the walls, converted it into 9 bedrooms. 6 of them are shared bedrooms. 3 are private rooms, and surprisingly, shared rooms are very, very common in senior housing and something that people are looking for. So to be able to offer both shared and rooms and private rooms. So we're doing big renovations on these projects, taking anywhere between 6 to 12 months. Our first one took about 10 months, and then we're now economies of scale and building momentum and just leaning our construction timelines and permitting timelines as we continue to do concurrent projects. But renovating them for about the year, then we get the licensing. So licensing, it comes from DSS, Department of Social Services. We have become very close with the Santa Rosa Planning Department, the Fire Department, the Social Services, just because we're working now on our 3rd project in the last year. So they're very helpful in getting licensing for these facilities. They know that there is a huge demand and there are not enough beds. And so they are really looking to get people licensed. One of the biggest questions I get from investors in this is, what if you don't get a license? What is there a chance that you don't get granted a license? Like, is that a worst case scenario type thing? And to be honest, I don't see that happening on any of these projects just because of the huge demand. And now working with licensing, want to help you in any way they can. They have so many different resources. They're working with many people who are coming at this and doing it for the first time and are jumping through all sorts of hurdles and getting things all teed up. And they're really with you side by side, making sure that you get the license. So that can be around a 4 or 5 month process, just getting the licensing for these buildings. And then the goal is to get it open around that 1 year mark. Once we get it open and start filling on it, that's when we start cash flowing for our investors, and then our investors start generating some income on it. And then once we get it completely full, the value of the building 3-4x. So for instance, we bought that building for $1 million, put $500,000 into it. Once it's generating the income completely full, the net operating income is over $100,000 a month. So the value of the building, how people determine values of building is how much money it's bringing in. And so then the value of the building jumps to close to $4 million. So you can see in a year, we're taking $1 million building and now it's becoming $3 to $4 million. So at that point, our goal is to refinance and get all our investors' investment back to them, and then we continue to cash flow in the deal. So that's how we're turning this business model into an investment for investors, for them to jump in and be a part of. And Horizon Trust does a great job of showing you guys in their list of different companies to potentially invest in. Like it could be all over the place, right? It can be the self-storage, multifamily, residential care facility, the senior housing. So this has been a really great model for us. It has been so appealing for investors that they have filled up completely and very fast. And so, and the way that real estate is right now, especially commercial real estate, it has been sitting on the market so much longer than it normally does. If anyone is involved in commercial real estate, our broker at Marcus Millichap was just telling us that previously, they had always had about 50% of their deals under contract. Now they only have 25%. So slash that in half. So buildings just aren't selling as fast. So it creates a great opportunity for operators, for buyers to come in and buy. And so we're buying properties at a very discounted rate. We're raising the capital to do the construction. We're getting the licensing for the building. We're making our investors whole. So it's been a really, really great investment, and we're looking to do a lots more. So if you guys are interested in joining us, I'll have information at the end of it. But this is a look at our portfolios. And now, as I mentioned, we bought the 3 properties in the last 8 months. So Providence is the healthcare system that I worked for. I worked with them for over 8 years. And in a really full circle moment with Providence Health, we ended up buying our second building from them. It was a old office building that I guess historically had been used to house nuns for the hospital. Providence was a Catholic ministry, and they had many nuns in the facility. And this building, a single-story building, built in the 60s, and they transitioned it from housing for the nuns into an medical office building that was used for orthopedics, I believe. But it had been sitting empty for about 9 months when we purchased it from Providence. And it was, yeah, like I mentioned, just a really full circle moment. But that building is directly across from the hospital. We'll be using it to house many hospice patients as well. Many of these senior care facilities allow the ability to house hospice patients. So patients who are at end of life, living out really their final days, weeks, months. They need places to go, and there are not enough hospice facilities. And so they use these senior care facilities because they have the room and the beds to house hospice patients during end of life. So we've opened ourselves up to that as well, although it wasn't originally a part of the plan, but it took we had a large open house for our first facility and had three different placement coordinators over there. Two of them are hospice specific, and they were just like, "There, we need places, we need beds. If there's any way that you guys would be interested in housing hospice patients." And so that's created a huge, huge referral opportunity for us, and really cool that we've been able to do the all three campuses within a 10-minute radius of each other. So Brush Creek Assisted Living is the brand that we're building for senior care housing, and we're going to continue to grow it. Specifically here in the Northern California market, we'll branch out to some of the surrounding areas here in Santa Rosa, if any of you guys are familiar, but Sebastopol, Novato, Marin, Napa, some of these outlying cities. But our plan is to continue to grow, and with that comes the economies of scale. So shared staffing, shared marketing, operational efficiencies, a little different than we've done our multifamily deals, and that those and these continue to each be an individual fund that you can invest in. They're not all grouped into one fund. Each different property will be a different fund for investors to invest in. But being able to share in the staffing and marketing really increases our visibility with the community and different seniors that are needing care. So that brand recognition. And I mean, really, why we love this asset class, healthcare and housing are necessities. They're not luxuries. And why we've always invested in multifamily, and that asset class has always been an extremely resilient asset class. One of the first to bounce back after the 2008 housing crisis. And we were investing in multifamily all throughout the COVID pandemic and getting excellent interest rates and great deals on properties and huge returns for our investors, because housing, it's a necessity, and inventory across the country being low, there's people that need it. And so whereas we've invested in the storage facilities, and that just, it hasn't performed as well as the housing, because it is almost, I wouldn't call storage a luxury by any means, but not as imperative, I suppose, as housing is. But what makes this really cool, and I have a lot of healthcare investors use the IRA custodians, most of them Horizon Trust, because a lot of them work different jobs and don't know that. Most of them don't know when you leave an employer and you have an old 401k just sitting there collecting dust, really with a click of a button, you can convert it into a rollover IRA. And then from there, you can self-direct it and use it to invest in all sorts of things, gold and such, and real estate being one of those. But it's tangible. It's different from the stock market. I can't tell you how many phone calls I hop on with people who have just been hit so hard by the stock market over the years, and so frustrated with the roller coaster effect that the stock market sometimes has on us as investors. And it can be very discouraging to see if you have 100% of your retirement fund sitting in the stock market and you watch that roller coaster. I mean, it can become very emotional. And so using those funds and diversifying, investing in tangible real estate. There's just real estate performs because it cash flows, and it appreciates year over year. There's the tax benefits, which aren't always as achievable within the IRA, but definitely if you're investing with liquid cash, huge tax benefits. But it sets itself apart from some of the other investments that you can be jumping in, or what are kind of pushed on all of us as a one size fits all. I mean, I know when I got my job as a nurse for the first time, it was like, all right, here, put your 15% of your paycheck in the 401k stock market and that's it for retirement. That's your one path. And so, all of you guys being here and educating yourselves on different asset classes is a huge, huge win. Opening your eyes and ears, your minds to other investments is really beneficial. But more specifically on the senior housing, that reoccurring income potential, and like I mentioned, the diversification. So, why self-directed IRA investors are paying attention? Because it is, these asset classes are starting to and do sometimes outperform the stock market, having the real assets. Like I mentioned, we're seeing over 30% internal rate of return on these senior housing projects. So, just huge opportunity to be growing your wealth at a better rate. Albert Einstein said compound interest was the eighth wonder of the world, right? So it is advantageous for us as investors to have our money working harder for us earlier on because the compound effects of that are just phenomenal. It's definitely worth paying attention to and taking advantage of. Also pointing out that senior housing has a lot of inflation resistant characteristics. The demographic trends, as I mentioned, are just something that really sets it apart from other real estate investments. And so, us moving forward at Willow Investment Group, we're continuing to grow, continuing to buy, continuing to have investments offered out to our community. So if this is something you want to get involved in, I'm going to have on the next screen a contact opportunity. But really, it is very mission driven for us too, and something that I think definitely sets us apart from other operators who are buying real estate and managing it and pushing returns for investors. That's great. And that's what we do for our multifamily deal. And there's a lot of money to be made, for sure. But the senior housing, for us really hits different, as I imagine anyone here who's dealt with this personally. It's a transition of life that all of us are approaching, whether or not we're thinking about that. For me, I got three kids. Like I'm very much in my mom phase, and that's not a thought I think about every day, but it will come for me. And to know that there are houses that are being cared for and paid attention to, and have the little details matter in these investments. It's something that because it's close proximity wise, I'm over at these homes every day. And I've created art for them, like tons of yard art. My daughters and I have done weekend projects and collected driftwood from Bodega Bay and made huge sculptures in the yard for the residents to see. And it's just very personal here. It's a different kind of investment. So maybe something different than what a lot of you guys are investing in. But here is information of how to get a hold of me, more information about our company, Willow Investment Group. We do have an offering available right now, down to the last 300,000 in that one, but is an opportunity if anyone's interested in that. But I would love to pop off and get some of these questions. I see a bunch coming in and I wasn't getting them on my thread, so I'm going to exit out of the screen and pop up. But if anyone wants to snap this QR code quickly before I do that, this is just a link directly to our website, which is willowinvestmentgroup.com.
Savannah, before we jump into all the questions, is there a specific email address or phone number that you want to drop into the chat
Yeah.
while starting to review some of these questions as well?
Yes.
Perfect. All right, sounds great. So while Savannah's putting in her contact information, because there has been plenty of you who have asked for that already within the chat, which is exciting. So thank you all for all these great questions. So Savannah, as you're wrapping up, kind of pasting that over into the chat, one of the early on questions before we kind of get into the actual investment piece is, can you just give, super high level again, just the difference between assisted living and nursing homes?
Yes. So assisted living is, and there's a lot of different classifications, and it's something that you honestly won't even really be able to differentiate with the names because they're so care home, senior housing, all inclusive. It really takes going to their website and trying to understand what care they truly provide. So for us in our homes, they're classified as RCFEs, residential care facilities for the elderly. And the care that we're providing for residents is 3 meals a day, snacks, so all their food, laundry, and medication management. So there is a huge component of medical management and communicating with the doctors, helping to schedule and facilitate appointments, sometimes transfer to and from these appointments. And also if the medications need to be adjusted in any way, we are the ones that are advocating for the residents and creating that communication with the physicians. But the level of medication administration for us in our facilities is we can't give medicine. It's pouring the medicine in the cup and placing it in front of them. So that's how low level of care it is. I mean, we can't even put the medicine in the mouth type thing. If the residents aren't allowed to do that, they're moving up to a higher level of care. And then you can go all the way up to like a post-acute skilled nursing care. So those are most of the time seniors that are coming straight out of the hospital with surgical wounds or some sort of wound that needs to be cared for, or tubes that need to be cared for. So that would be more the higher skilled nursing level. And we're down here kind of at that RCFE.
Got it. Do you get government incentives for this?
So there are government incentives out there. Surprisingly enough, the majority of these are private pay. So over 80% of the residents in these houses are private pay. We are open to receiving different allocations from the government, and we have tons of those resources on our website. And also placement agencies work with families to get those for people who need them. But to be honest, the majority of ours will probably be private pay. And with that income level, we're just able to provide such a higher level of care at that point too.
Yeah, no, that all makes sense. All right. Then we have another question. And this may be more in the weeds, so maybe this is a conversation for you all to jump on one-on-one. But the question is, they thought the California law limits private homes to only 6 seniors.
So there are different levels. So you can go 0 to 6, 7 to 15. We're at that 7 to 15 mark. And then you can go above that. It's just different licensing. You're filling out the application a little bit different, but there's all sorts in California.
Perfect. And speaking of California, do you plan to go outside of California?
For now, no, just because there's such a huge need here in Northern California, but we are definitely open to it. Hawaii is on my radar for sure. But for now, we're having so much success in Northern California that we're really just honing in.
Perfect. All right, sounds good. If you haven't already, drop your contact information because people keep asking. I may just not have got it to it yet.
I did. Yeah.
Go ahead and hit send on that. And then while you're doing that, and I love that all these questions are related to you. A lot of times it's like gets into like more of self-directing questions, but everyone's really excited about you. So, to continue down through our list, is this a syndication offering?
Yes, it is. It's a 506 B moving into 506C. All of our offerings are either 506B, 506C. Yeah.
Okay, wonderful. And obviously, there from a guarantee of investing perspective, a few questions kind of relate around this is what's the return? What's the minimum? Can you just kind of talk a little bit more about what that looks like for you?
Yeah, so our minimum investment hovers around the 50,000 mark. I can be a little bit flexible with that, especially with Horizon Trust. investors because all the paperwork is so smooth. They make the process so great. So we can drop down sometimes into the 25K mark if that's where you're at. Email me. We can hop. I like to hop on the phone with anyone regardless, just to get to know your investing goals, make sure it's a right fit for both of us. But yeah, I usually all the paperwork will say 50K, but I can go a bit lower. So.
Perfect. All right. Sounds great. And do you have to be an accredited investor?
Nope, this is open to unaccredited investors. Yeah, most nurses are unaccredited, so I will keep all of the offerings open to unaccredited investors specifically for that reason. You know, I knew when I was a nurse and wanting to jump in these type of investments, I felt like all of them were off the table, like they were so unaccessible, and so making these investments accessible to non-accredited investors is a huge priority for us.
Perfect. So we have 15 minutes remaining. I have one more question that's ready to be queued up. If anyone else has any questions, please go ahead and jump in. How does IRR translate annually to the investor?
Yeah, so IRR is a little bit different. So for all of our multifamily deals, we've always highlighted the AAR, the average annualized return, because that's the one that's most comparable to the stock market. The IRR takes into consideration the time value of money. So for these senior housing investments, because we're returning the investors' capital back to them so early in the investment process, as opposed to our multifamily deals where we were flipping them over like a 3 to 5 year period. With the senior care housing at that 2 year mark, we're doing that cash out refi to make our investors whole at that point. So because they're getting their money back so much quicker than any other investments, that IRR is really what we want to capture and really what jumps. I mean, over 30% is insane. I think this latest one is actually closer to 37%. But that's really because the investors are getting your capital back so early in the investment, because then at that point, in a sense, you're in on the investment risk free. I mean, once you get your investment back and you're made whole, all our investors continue to maintain equity in the project. And so regardless of that initial investment going back, you as an investor still earn equity, so you still continue to cash flow. So that's what makes the returns so juicy in this investment.
Perfect. All right. And then Adam asked why the holding period is 10 years.
Um, so these ones are longer. So for our multifamily, we've always done the flips around the 3 to 5 year mark, because our goal and what we hear from investors is they want the money back as quick as possible. So for these senior care housing investments, because they're getting that investment back so early, we figure because it's going to be cash flowing and making such good money moving forward, it's a long-term hold at that point. And then that gives us 10 years to build up a huge portfolio. Maybe we sell them off to a large buyer, like merger and acquisition type thing. So it creates a lot more exit strategies at that point, the longer hold for us.
Okay, wonderful. And I think we already hit on this, but just because a few more people are asking, just can you share the return again?
Yeah. So, for these specific senior housing, say for a $50,000 investment, no cash flow for the first year, because we're getting the construction and licensing. Then once residents are in the building and we start cash flowing, so do our investors. And then once we hit that 2 year mark, that's the goal to do the cash out refi. So at that 2 year mark, our goal is to get our investors' entire investment back to them. So that'd be that $50,000 that they originally invested. And then they would continue to cash flow on the investment. So if you're interested more in that, I dropped this link here that has the specific returns. If you click on that link that I just dropped in the chat, it'll show you specifically for the latest offering what we have. It'll show cash flow, ROI, IRR, all those specific metrics there. But it differs deal to deal, and each property that we buy is an individual fund. But this is our third project in the area if anyone's interested.
Wonderful. And what is the length of time you hold these beyond the 2-year initial investment return?
Yeah, 10 years.
Perfect. All right. And then we still have over 70 of you on. So if you do have any other questions, just want to make sure that I mention this. But the last question I see here is, are there incentives for people to bring you investors?
In a sense, yes, for sure. We very much appreciate referrals. So it's more of a case by case basis, but something that I would love to talk to you about if you're interested.
Wonderful. All right, perfect. Well, I'm going to give one more minute just in case anyone's in the middle of typing their question, so that way I can make sure that we get them all. If you asked a question and you did not hear us say it, it is not because I skipped it on purpose. It is because I just simply missed it. So please go ahead and drop that back in if you do have any. Tracy just asked again if you're going to go outside of California. We already hit on that. Any other notes on that one?
Yeah, not yet. I mean, we're having so much success in Northern California. There's such a demand here and a huge opportunity to buy these real estate specifically here. So we're very honed in on the economies of scale, specifically in the Northern California market. But I did mention we're looking at Hawaii and some other ones, but for now we're focused in here. And
Perfect. And I just put the link back in. I
okay,
think you may have only
perfect.
sent it to me, but I got it. So I was very
Oh,
excited. So
I did.
I did
Oh.
I did go ahead and paste that back in. So you should all have that now. Um, thank you. Lots of thank yous, lots of love this. And then, all right, I think last question then with our 10 minutes remaining is can you mention the details on any tax benefits of investing
Yeah.
through your avenue?
Yeah, investing through the IRA account, the taxes are a lot different than if you were to invest with liquid cash. Um, the money is in a sense almost sheltered because it's a retirement account and you have your own tax laws working on that money. Everyone's tax situation is so individual. So always recommend that if you're interested in one of these investments, that you let your CPA know and they'd be able to give you a better idea of what that specifically means for your tax situation. But if you're investing through these IRA accounts, not a lot of huge tax benefits. But if you invest with the liquid cash, we do what is called a depreciation schedule on our investment. So it just is almost this tax loophole where you can immediately write off huge amounts of expenses early on. So it shows a bit of a loss. So any of the income coming in doesn't it doesn't show with your income. It's offset. It's showed as a loss. So that's very, very beneficial for our investors that are investing liquid. We always try and optimize all the tax benefits that we can with real estate. Our CPA is heavily invested in real estate himself. He works primarily with people who are involved in real estate. He oversees every single one of our portfolios, our funds. He oversees all the accounting and tax strategies. So we're always looking for ways to optimize this for investors.
I love that. All right, wonderful. Is there one more quick question? Is there a monthly payment to investors in the syndication?
Yeah, so it's quarterly. So every quarter we send out a newsletter letting you know what's going on with the project, any updates that we have. We give full financial updates. We are very transparent with our numbers. We've found that's something that investors absolutely love. And so every quarter we send out a P&L, a profit and loss statement. So all of our investors can see exactly where the money is coming and going in the investment. And we do that once a quarter. And then at that point, the distribution is made either directly to your bank account or to the IRA custodian if it's going back into that retirement account. That's done automatically every 3 months. So every quarter we do that.
Okay, perfect. And then we did have a question in here just of if someone is very new to self-directing, how do they get in touch with our team? So I just put our link in there as well. You can jump right into that link. That's going to help you to get on a call with one of our IRA specialists. This is very, very special time for you because you get to learn about it. You get to ask really good questions. And that individual that you're going to speak with is really going to help you to understand what's going to be, what the journey is going to look like from getting started all the way through. So we're very, very excited to be able to share that with you all in case this is something in case self-directing is new to you, you'll be able to obviously speak with a IRA specialist on our team. And then Ken just asked, since we're on the topic of self-directing, do the profits have to go back to the IRA? So yes, if you're investing your IRA into Savannah's fund or someone else's, wherever you're investing that will go back into your retirement fund for you.
Yes, but a great
And
way to grow the funds higher than you would a traditional investment. I mean, like I mentioned, with the returns that you can get in an investment like this, that compound growth really just takes off. So even though it's not as liquid, it's still just a great way to diversify and to compound. And for working with the Horizon Trust team, they've been so great. I mean, I've personally gone through the process. They make it seamless. They're very available and helpful. I've also referred many doctors and nurses who are very limited time and like to see things done quickly. And they're always very impressed with the work that Horizon Trust does. So, yeah.
we very much appreciate that. All right, wonderful. As I started this call with, there's always a few that are asking about the replay. So yes, the survey will be coming straight over to you. But that's the last question that we had queued up here. So I believe we are all caught up. So please go ahead, fill out that survey. Let us know, give us all the feedback on what you thought of Savannah, and then also give us some feedback on other guests that you would like to see. So thank you all so much. I hope you have a wonderful week, and we will see you all in 2 weeks.
Awesome. Thanks so much.